If you look back to, say, the 1950s, all the way through the 70s, Venezuela was in a remarkable position.
It was really the envy of Latin America.
Absolutely. I mean, its per capita income was higher than some European countries. People called Caracas the Paris of Latin America.
And then you fast forward to today, the picture could not be more different. Mass migration, hyperinflation.
A total economic collapse. This is the real story. We step back from the daily headlines to give you the context, the research you need to understand how something like this actually happens.
And the core paradox here is it's stunning. You have a country sitting on some of the largest proven oil reserves in the entire world.
That's right.
A resource that should, theoretically guarantee wealth for generations. So the question is, how does it all go so wrong, with the collapse really starting around 2013?
That is the central question. And the media, I think, often oversimplifies it. You hear a lot about fluctuating oil prices or international sanctions. And those things, they are factors, for sure. They made a bad situation worse.
But they aren't the cause.
Exactly. They mask the real driver. The research shows this crisis was driven by a very deliberate, decade-long process of dismantling the institutions that were meant to protect that oil wealth.
So the protectors of the wealth became the mechanisms for its destruction. That's the real story here.
It is. And to understand how that happened, you first have to see that Venezuela was structurally vulnerable to begin with. It was a classic rentier state.
Right, an economy that doesn't really produce things so much as it collects rent from a single resource.
Yes. Since the 70s, oil rents were about 20% of GDP, and fuel exports were something like 85% of all exports.
So the entire economy is balanced on this one thing.
The entire economy. It creates that classic resource curse dynamic. And that already fragile system is what became the target for this institutional dismantling right after 2002.
And the first, maybe the biggest step was the total politicization of the national oil company PDVSA. And we're not just talking about changing a few executives at the top. This was a purge.
Oh, it was a complete purge. It was devastating. After the 2002 oil strike, the government fired over 20,000 employees.
20,000.
Professionals, technical staff, many of them with over 15 years of experience in the industry. They were just gone.
And replaced with political loyalists.
Replaced with political appointees, people whose main qualification was loyalty to the party, not, the technical expertise needed to run a massive global energy company.
So PDVSA's mission just completely changed overnight.
It did. It went from being a commercial enterprise trying to maximize production to a political tool used for funding social programs and ensuring loyalty. That's when the operational decline really began.
And while this was happening, they were also getting rid of the checks and balances, the oversight.
Yes, that's the second key mechanism of destruction. They systematically removed any independent monitoring of all that oil money.
And the clearest example of that is from 2004, right? When they merged the Ministry of Petroleum with the presidency of PDVSA itself.
Exactly. On paper, maybe it sounds efficient.
Right.
But what it actually did was kill internal accountability. The ministry was supposed to be the independent auditor for PDVSA.
The watchdog.
The watchdog. And overnight, it was gone. The nation's main source of revenue no longer had any real internal oversight.
And then the third piece of the puzzle, they created these new ways to spend money that completely bypassed the entire system.
The parafiscal funds, like a famous one called Fondon.
Right.
These funds were just fed billions of oil dollars, but they operated completely outside the national budget.
No legislative approval, no public debate.
Nothing. Analysts called them an unaudited petty cash box for the president. It was the perfect tool if you wanted to move massive amounts of money around with zero accountability.
So you've destroyed the expertise, you've removed the oversight, and you've created a slush fund. The stage is set.
The stage is set for large-scale systemic corruption. And the main engine for that was, funnily enough, currency policy.
This is where it gets really insidious. In 2003, the government brings in these really strict foreign exchange controls. Supposedly to stop capital from leaving the country.
But that's not what happened.
Not at all. Those controls became the single greatest tool for systemic theft. The problem was this huge artificial gap between the official exchange rate and the black market rate.
Can you break that down? What does that actually mean? Well, think of it this way. The government would sell you a US dollar for, say, 1 unit of local currency, officially.
Okay.
But on the street, that same US dollar was worth 100 units. So if you were politically connected and could get dollars at that cheap official rate,
You could instantly multiply your wealth by 100 times just by selling them on the black market.
a risk-free, guaranteed profit. It was a license to steal, built right into the country's financial system.
And the scale of this, it's hard to even comprehend.
It's staggering. International investigations have tracked at least 127 cases of, let's call it, wrongful management in PDVSA and its subsidiaries.
And the amount of money?
It compromised over 42 billion US dollars.
42 billion?
Yeah. And you have to remember, for a country that's facing shortages of medicine, of food, that money was directly diverted from those critical needs. It's a massive drain.
And it wasn't just internal corruption. This oil wealth was also being used externally as a political tool.
Right. To buy friends and influence in the region, again with very little oversight.
The Petrocaribe Agreement is a prime example. This was where Venezuela would sell oil on very preferential terms to, almost 20 other countries?
Yes, and it very quickly got tied up in corruption scandals. You had PDVCA subsidiaries, like one called PDV Caribe, being used for what was basically political financing.
I think I saw a report about them distributing diesel to mayors in allied countries right before an election.
Exactly. The nation's most valuable asset was being used as a personal campaign fund.
And what about the oil-backed loans, especially with China?
That's another huge piece. The Venezuela-China Joint Fund, for instance, got over $50 billion. But the key thing is the complete lack of transparency. Almost none of those loans were ever included in the national budget or borrowing laws.
So the state was taking on massive debt, using its oil as collateral, and the public had no idea.
No idea. And this all leads us to a really important clarification about the role of sanctions.
Because sanctions are so often pointed to as the one and only cause of the collapse?
They are, but the timeline just doesn't support that. The data is very clear. The really severe economic contraction, the collapse in PDVS's oil output, production just falls off a cliff. That all started much earlier, around late 2013, 2015.
Which is years before the really biting U.S. sanctions were applied in 2017 and 2019.
Exactly. So while the sanctions absolutely made things more difficult, they didn't start the fire. The house was already burning down because of these internal, structural decisions. To ignore that is to miss the real story.
So stepping back, what's the global lesson here? Because this isn't just about Venezuela.
No, it's a powerful lesson for any resource-dependent economy. It's the resource curse in action.
That having immense wealth doesn't guarantee stability. In fact, it can be destabilizing.
Especially when it's combined with weakened institutions. That flood of oil money with no auditors or independent judiciary to check it just created a perfect storm for corruption instead of sustainable development.
And what's so tragic is that this weakness, it's not just a thing of the past, it's actually been written into law now.
You're talking about the anti-blockade law from 2020.
Exactly.
It's a fascinating and, frankly, a very concerning piece of legislation. The public justification was that it was needed to get around U.S. sanctions.
But its real function is something else entirely.
Its real function is to institutionalize opacity. It gives the government the power to classify almost any information about state-owned companies, especially PDVSA, as secret.
So it just eliminates any possibility of oversight.
Completely. Civil society, the legislature, independent journalists, they're all shut out from monitoring trillions of dollars in state assets. It's secrecy by decree.
And you can see the results. There are reports of at least 33 state companies being put into private hands since 2015, and it's sped up since this law was passed.
With no public bidding, no transparency, and often involving people who've already been accused of corruption.
And the human cost of that is immense. When you can't track where the money is going, it doesn't go to medicine, it doesn't go to food, it doesn't go to fixing the power grid.
That lack of accountability translates directly into human suffering.
It really forces you to shift your perspective. The question for a country isn't how much oil do we have?
No.
It should be how strong are the systems that govern that oil? Stability doesn't come from the asset in the ground, it comes from the institutions.
That's the heart of it. Venezuela proves that unchecked political control over a national resource is a blueprint for destroying those institutions.
It's why, despite all that oil, the country consistently ranks as one of the worst places in the world for energy investment.
Because investors know. They know that the value of the oil means nothing if there's no rule of law, no contract protection, no stability.
Right. The systems, transparent auditing, and independent judiciary, separation of powers, they matter infinitely more than the geology.
So the deep insight here really is that when a country turns its main source of wealth, whether it's oil or minerals or anything else, into its primary political tool,
That resource stops serving the nation. It starts fueling the failure. It only serves to enrich a very select few.
it really does. So that leaves us with a pretty big question, I think. What does Venezuela's story truly teach us about what it takes beyond just having resources to build resilient, long-term economic stability in our modern world?
That's the question to carry forward. Thanks for joining us for this deeper look into the context behind the headlines.
If you found this deep dive valuable, please do like, share, and subscribe to The Real Story. We really do read your comments and consider your suggestions, so let us know what story you want to understand next.